People say, show me your checkbook, your calendar, things like that, and we can tell you what's important to you. I mean, it's true.
So then let's talk a little bit about cash flow. We've used that term a few times already. What is a cash flow?
Yep. Yeah. So very high level. There's a few different words, so like budget, spending plan. A lot of times, like these words are words people don't like to use. I think it's kind of limiting. They think, I can't, I have to figure out what I'm going to spend and then I can only stick to that. So cash flow is, I think, a better way to think about it just because it's this flow. It is fluid. Things do change. So cash flow is the money coming in, the money going out. At the end of the day, you have to have more coming in than is going out to be able to have money left or to be able to save things like this for the future so that you will have money for later. If you're a person who kind of gets stuck like in this budgeting conversation, or I don't know how much to spend, or I don't know if I'm spending right, or I think there's a lot of ways people can get stuck here. Just remind yourself at a very high level, all you're doing is making sure that what's coming in is more than what's going out or equal to, because some people will say, hey, at the end of the day I want to have kind of the zero sum budget to say every dollar has a place and then I'm going to put it somewhere. So even if I'm not spending it, it's going to go somewhere where I might be giving it or I might be saving it. So there's a few different ways, but at the very core of it, income minus expenses. So
yeah, if like you said, there's not money left over, how are you going to pay the bills tomorrow? And so I think the fallacy people can fall into is, oh my gosh, I have all these assets, or oh my gosh, my bank account is still in the green. Okay, but are you really understanding the status of your finances and what do you have left over?
I think too, people just don't understand how big of an input this is. So when we do a plan for someone, and let's say that we assume you're spending, let's just say $60,000 a year outside of maybe a mortgage and things like that. So this is just everyday expenses like gas, travel, stuff like that. Versus if we say 70,000 a year or 100,000 a year, that makes a huge difference because what we also assume is $60,000 today. Next year is 60,000 times 3% for inflation.
Mm-hmm.
And so it gets more expensive every year. And this is why I think this is a helpful conversation, because I think a lot of people are finding themselves probably, if you've just, let's say you haven't changed your lifestyle, you're just spending all of the same things that you normally do every year. You might be finding yourself this year saying, well, my dollar doesn't go as far. That's inflation right there. And so this is where when you build a plan and we say, how much are you spending? Now we have a place to start from.
So then, how should people start analyzing their cash flow?
Mm-hmm. Yep. So this one is can be an easy one for people who maybe have a W-2 job where they have a salary, so they know what they're getting every year. So you've got income just from an employer. Now you also might have things like a bonus. You also might be commission based. So some of these are the places that people get stuck. And so at the core of it, it's just what income do you know you have coming in? If that's fluctuating, just income coming in. So this could be from a lot of different areas. If you're retired, for example, you could have a pension, you could have Social Security, you could have a lot of different sources of income. If you have a rental property, whatever that is.
So we know that if we take income minus taxes minus savings minus giving, we have what's left over to spend. How do you help people dive into the actual, what is that spending money going to?
Yeah, there are a few factors really to identify kind of within this spending. Factors for you to think about or identify in your spending are, where are you spending? How much are you spending? So wherever that is, how much is that? When are you spending that? So this is important because think of things like property taxes. If you have this twice a year or once a year, or maybe it's a little bit every month. So when does it come up so you can budget for it? And then frequency, how many times does it happen? So again, kind of back to the once a month, once a year. So these are all really important. So you can actually build that budget so that you're setting money aside for when those expenses come up.
Mm-hmm. And I think that's also where the items like your Starbucks spending will come in, because you might not realize how often you're spending money on something like Starbucks.
Yes.
So that's why cash flow and understanding the income and the expenses is so important, because then you can start to adjust, pivot, and take control. And whether you call that a budget or a spending plan, or if you literally call it a cash flow, you need to come up with some kind of plan. And so there are different tools to help with that. So why don't you just walk us through some of the tools that you recommend people as they start to look at their own personal cash flow.
Yeah. Yeah. Because personal cash flow is just that, it's personal. So everybody spends differently. Everybody wants to give their money to different places for different things. There are tools to track it. So some people like QuickBooks, Monarch Money, You Need a Budget, or even simply a spreadsheet that you create. Everybody, again, likes to see information in different ways. So you just might like a very simple, you enter it because then you're going through and actually reviewing this. So that might be your way of making sure you're reviewing it. Pencil and paper. There's a lot of people that still use that, and that works perfectly fine if that works for you. These are systems that actually will take that information. So you're going to enter this information and then you can summarize it. So this is, at the end of the day, this is data, this is information that you're trying to summarize and you're trying to be able to use then to apply it to, should I be making changes? And the benefit of this is actually being able to use that information to now say, do I like this? Do I, now I can see, okay, wow, I'm spending a lot on this. And so maybe things like recurring subscriptions, you're spending more than you want to. And when you see that amount, you might say, wow, that's $600 a year. I don't even watch that much, or I don't even
Hmm.
listen to this that much. Now you can start to weigh what's the value I'm getting versus what I'm paying for that item. And so that's what you can start to see.
Yeah, and it's also worth mentioning that just because you're tracking it doesn't mean it's a bad thing. So you
Mhm.
might be okay spending so much money on Starbucks because that's something you enjoy. And we always talk about living more and giving more. And if that's an example of one thing that brings you life, then go for it. Full send it. Get that daily Starbucks. So, when is it okay to exceed your budget, and how do you kind of curb